All right, hey there guys, Sam back with another video. We're looking at the GRIDAlgo suite of indicators and tools. The reason for this video here, this is over here on the left, we're looking at an addition this is an additional indicator that comes with the GRIDAlgo package. We didn't talk about this in the first video here, so I'm going to review this. And then secondly, as I go over here and pop open the dual bands, we're going to start here. Well, this is a twofold purpose here. One, just as a reminder to those of you that either own the GRIDAlgo system and are transitioning over to working with us as we continue to improve the product and offer support, just so that you are aware we are now your source for all of that content, the updates, the support, new features as we release them over at TDI, having bought the rights from the creator. I think many of you that already own the product are well aware of this. Okay, so with that said, we've already made some what we believe are improvements to the product, and I think you can expect that to continue because there's a lot of potential here. Now, I do have this applied to the MNQ. So many of you want to trade this on the NQ. It's understandably, right? It moves, it's so volatile. Remember, that's a double-edged sword. But with that said here, now, because so many of you are trading the NQ and the MNQ, and perhaps you've seen this demonstrated from the creator as well as early videos in your own experimentation, I'm going to add a little of my own personal experience here. The challenge with the NQ or the MNQ, if you're using Renko bars or bricks, is determining the size of the brick. I think that's an ongoing challenge with the MNQ because of this extreme volatility. Over on Ninja, we have a product called the Renko brick size calculator that tries to approximate what a 1 minute candle would equate to in a Renko brick. And any of you that have played with that know that on a volatile day, you can end up with a brick size that's simply untradeable. The risk is way too big. So that's something we have to consider. So of course, you can continue to do a little trial and error, experiment with it, see if you can come up with something, but I think what you'll find is that based on the volatility, that can vary day to day. So as an alternative to consider would be working with a Heikin-Ashi bar, which is also designed to help you identify trends, right? Most of you will be aware of how a Heikin-Ashi bar is formed. It's an average, right? So we're always opening at the midpoint of the prior bar, right? So it can keep you into sustained moves like that. So that's something for you to consider. Okay, I want to get the crosshairs off of there. So this is I've got 20 days of data here on a 1 minute Heikin-Ashi in the MNQ. It's workable, right? Now today I'm recording this on Thursday, the 1st of May. And here's the full day. I do have the opening range indicator within Quantower, just as I'd like to do, because one, I would propose to you along with VWAP these are the most important levels of the day, and so you need to have them on. You need to know where they are, and then it kind of frames up the day for us, so we can look at here we've got from open to cash close here. Actually, I think we're going a little bit beyond cash close. Here's the cash close right here, and this is going for that final hour. So we can see the whole day, right? And you can certainly see, we get into something like this where we have all of the riding the rail, as I like to call it, where we just hover and we go back both sides of the IB, right? This is not a place to enter ever, right? You'll get chopped up here. That is, with few exceptions, this is rarely a good place to enter. Right now, of course, I talk a lot about the first test of the IB, that being a high probability trade, something that we've talked about for years since we really identified there's an algo there. But just in general, when we get in these ranges here where we're just on both sides of the initial balance, that is just a terrible. And often that'll be right at one standard deviation of VWAP and or the value area edges here. I've got volume profile turned off just to kind of keep the chart a bit less cluttered. But these areas here, you got to really be careful about that. Okay, now, so if you're applying the iGrid dual bands here, well, you wouldn't have had any threat. We get one little pop here that takes us out of the bands, but what you'll notice is that there's no triangle here, no signal, and this is indeed what we think is an improvement here. Now you can look at this and say, oh God, that would have been great. Well, now take note here, that's right going into the close, so you may or may not want to be trading right there at, you know, a few minutes before the close. Of course, we had Amazon earnings and, you know, some big numbers about to hit the market, so may not be the ideal time for you to be taking a trade. That's neither here nor there. Let's talk about the improvement, and you're going to see it. Well, let me rephrase that. What we believe is an improvement. So you notice the yellow dot line up here, and then another one here. You see them here. You see them down here. What we're doing with that is we're using the markets and the algorithm's tendency to always want to look for liquidity. So essentially what we're doing is creating a swing filter such that if the price action here gets outside of the bands, we want to look, and we give you the option in terms of how far you want it to look back. But we're going to work with the default settings here. We want to look and see, has the market swept any liquidity? Have we taken liquidity out at a prior swing pivot? You see just a beautiful example right here. So here's the high, right? You can see we go up to it once, twice. On the third time, I mean, literally, I can't script this any better. We've gone just far enough to get outside of the dual bands, the yellow bands. And we're sweeping that liquidity here before we head down, and we go in a straight line to the lower bands. Now that's oh God, what is that? That's about 8:15 in the morning, right? So we're coming into, you know, volatility. As often they're 8:30 numbers. But take note down here at the open, right? Because that was really the only trade that it gave you for the rest of the day, which is not necessarily a bad thing on a day like today, particularly given all the volatility we've had. But why were these good trades? Well, you'll note here, because whoops. Go back a bit, not too far. Here's the swing low that was swept, and so once we get back in the bands, you might have had a loser here, right? That's enough. That could have stopped you out, depending on what your stop size is. But once we get back in, right, it's a straight shot to the other side. So you've got to be prepared to exit if you're on. So for example, here on the first time in, if you don't get it, okay, take the small loser, you know, again, depending on your stop placement. But when we go back in, you got a second swing at it, because we got 1, 2, 3, 4 arrows here. And then you'll note here the momentum, right? The iGrid momentum indicator gives you a positive here. It didn't here, right? We got it, but we got the one bar here, but then immediately went down. And on this one, we went up and stayed, right? Now, I like a CCI in conjunction with this. It's personal preference, right? You can use an RSI, a Stoke, whatever you like. I like the CCI because it's unbound, right? So I know when we get above 200, it's not likely to stay there. So here's a fairly good example. Now you might look here and say, well, wow, look how great that would have been, right? We're outside of the bands. Well, we did get a sweep here, right? Here's the liquidity that was swept, right? That was the beauty at 8:30 that gave you the straight shot to the lower edge of the bands. Now we get into the open. So as it's an ATR-based bands, these are ATR-based bands, you can understand why the bands widen right at the open. We go up very high. We sweep through this high here, but we're not outside of the bands. So once we get all the way up outside of the bands, there's nothing to the left that we could have swept, which is why you don't see a triangle here. No liquidity was swept up here relative to the swing settings that we have in the default setup. So let's look at that very quickly here, just for clarity. Okay, so let's pop this open here so we can take a look at this. Now, just a quick review here, because we had a number of questions about people asking, like, what's going on with the half length? Let me see if I can push this over first. Put it down here for a second. Okay, a half length is a simple concept, but it warrants explanation. So essentially, these are a variation on TMA bands, and a TMA band is it's an ATR band that's got a whole lot of smoothing built into it, just to try and, you know, save you getting into the formula. That's essentially what we're doing here. Now, traditional TMA bands, which we produce at TradeDevils-Indicators, we have our own TMA bands, but this is a different type of band here, and it's using some fancy programming here to reduce the amount of repainting that happens in a traditional TMA band. And we're using a half length here which simply means if we have a 133 half length by default. So what the software is doing is it's going back 133 bars and going forward 133 bars to try and predict, right, to use that range. So here we've told it, okay, we want the bands to contain 90% of the range of the price action here. So we're only out 10% of the time. In the smoothing process, in a typical TMA bands, it will go back 133 bars, and it will use that to forecast forward 133 bars, which is often why you have some repainting on the right edge with TMA bands, right? It's adjusts and it catches up quickly because as the number of bars progresses, it's able to catch up. But with a traditional TMA band, you're always going to have a little repainting here. So the point being, with the GRIDAlgo system here, the repainting stops at the right edge of the market, right? So there is no repainting going forward. That's what's unique about these bands. It stops on the right edge. It is repainting all of the history, but there's no repainting going forward. So if you're using by default here, as we have it set with a half length of 133, well, that means you need at least 266 bars of data to get an accurate analysis so that the software can give you that ATR range and give you those bands correctly. So you'll note here on a 1 minute, I've gone to 20 days. Now that's going to give you plenty of bars. We had a few people that were using very large Renko bars, and they were using 10 days. And if you have, a huge Renko brick, it's possible that you might not have 233 bars, right? So depending on the number of days that you load. So 20 is with a 1 minute you're probably safe there, unless you're using, again, very large Renko bricks. So that's the idea there. And it's not. I don't know that you need to get into the formula of it to be profitable with it. It's just to understand that you've got to have at least that number of bars for it to give you an accurate representation here. And then remember, you can always re-optimize history with just a click of a mouse, right? You just tell it to re-optimize. You may or may not want to do that, but if you had a very volatile day, you might want to choose to do that just to tighten up the range so that it's using that recent volatility in the formula. Okay, right? So hopefully that gives you a little bit of clarity. I don't, again, as I said, I'm not sure you need to dig into the formula to be able to profit from it. Let's go to, let me bring this back up, and let's go to the new feature here, which is the swing filter. So let me bring this all the way down. By the way, the half-life in the inner bands, right, is 19, right? So that's much shorter range, which is why you have much tighter bands, right? So okay, with that said, let me go to, I got to go down here to the swing filter. Okay, here it is. So by default, again, everything I'm showing you here is default. So the default length here is we're looking at 100 bars to the left for any potential swing, right? For any liquidity sweep. Now that's a nice round number. There's no magic associated with 100. You can certainly tweak that to your heart's content, right? You can try 50, 200, 300, 10, or whatever you'd like. But you do want to make sure that it's a significant pivot that you're sweeping here. And if you're outside of the bands like this, likely you're going to have to go back in history because, for example, if I push this down here, this bar to this bar, that may not be enough liquidity for a major pivot. Well, it wouldn't be a major pivot, right? But if you're down here and we're pulling all the way here, well, you can see, well, it had to be at least 100 bars to get there. So that sweep is potentially more significant. Now, again, test, play with it as much as you'd like. If you want to change it from, well, here, we can do it right now. Let's just do it on the fly. So if I do that and then close that, I think that's gonna, there we go. It's gonna reset it here. So we're gonna get more signals. You're gonna see now all of a sudden it's tighter. Here's one here. Well, now here there's a good example. Of course, that's right at the close of the day, right? So it's Amazon earnings. Again, when the thing is in free fall, that's not right? That's not a trade you want, right? So you want the market to be showing some. So here, I mean, that's why these were so good today. You're seeing beautiful divergence here in the CCI. Would have been the same in an RSI or Stochastic, anything you're using there. For momentum, you see all the little triangles here, but note here we start to get triangles that are higher than the prior triangles. That's always a bit of a tell, right? Those are the better signals. So while we've increased the number of pivots here that are there for a swing, yes, now again, this would have been good here, but again, it's right at the close, right? It's now, hindsight, right? It's easy. Like, oh my God, look at that! Look at how great that would have been. But let's just go back here now. One of the downsides of working with minute charts is, you'll recall now I'm at the 50 setting, not the default setting. I've got to go back here. So here's 9:30 yesterday. You can kind of get the idea. We're sweeping. Let's see if I can get them on the screen to where you see them. Here's one. Again, we're in free fall. That's early in the morning post data. So we're going straight down, right? That probably not one you want. Like at the very least, you'd want to wait for the bands to get turned and get back into the bands. Here we're sweeping all of this liquidity. If I can get it on the screen, can I get? Well, here's one. And it looks like these are going to be from the prior day. Now, you'll note here, when I changed it from 50 to 100, look at how many more swing pivots we've got. Now, those may or may not be what you want. We're just demonstrating here that that's an option for you to tweak. You might find something that works very well for you. Maybe you want 500, right, to make it really significant. 50 looks to me like it's too many. Too many pivots. So 100 may not be a bad place to start. That's what we always suggest, right? We've done some back testing, and 100 is a decent number. Like same thing here, right? Now we're going vertical here. No indication here that you might have exhaustion or divergence. I mean, that's just vertical, right? That's probably not one that you want here until we start to flatten out a little bit. Now we're now we're into the evening session here. So the point is just for you to understand that this is an add-on that we've put into the mix of the grid bands. You can turn them off, right? If you want to just go back to the original settings, right, without the swing filter, well, some may prefer that. We're giving you the option to choose that or not choose it. I'm going to switch it back to 100. So hang on a sec. I'm just kind of scrolling back through a couple of days here. I've switched it back to the default of 100. What you'll notice, right, if you do the same thing, whether you own it or are trialing it, is that far fewer signals, right? And the point is to eliminate too many bad signals or false signals where we don't get a turn. And the way that we felt that would be best to accommodate that would be make sure that there's a liquidity sweep. Now here, you might have had one right here, but we don't get outside of the bands, right? That's could you have taken a trade there? Well, of course. If you're using this, okay, I'll only take a trade when I'm in the 10% outside of the bands with 90, knowing that 90% of the price action has been contained in those bands. Well, this would have been perfect, right, as we come back in, but we're not sweeping any liquidity, right? So it's the judgment call, right? So without the liquidity sweeps, we're not saying, well, don't take the trade. We're just saying, be mindful of the fact that there was not a liquidity sweep there, which is always a depending on the trader, that can be take the trade, not take the trade. My view, right? That's always something you want to look for. Same thing here. You can see we swept the liquidity. I mean, this is pretty obvious here. We had all this liquidity up here that gets swept, but we're not outside the bands, right? So trade. That would have been a good one. So noticeably fewer trades. And another one right here. We're sweeping that liquidity, but we're not outside the bands, right? Here's another good one. Oh, would have been great if we'd swept that liquidity. The point is to try and reduce the amount of bad signals, right? Or signals that don't turn into profitable trades. And we felt like this was one way to do that. Okay, there's 18 minutes. So let me pause here and we'll go over to the new well, it's not new, but something we haven't featured in prior videos on the GRIDAlgo system. So stand by for a sec. Okay, this is often how when we've looked at prior video demonstrations of the system before we bought the rights to it, we often saw this combination here where there'd be dual bands over here on this side. Of course, I don't have the alerts or the cloud enabled over here. Likely you'd want to have all of that turned on here. Then over on this side, what I've got here, let me take this off here. I was just kind of show you that, right? Things that we've been teaching and showcasing here is as important technical events here. That doesn't change when you're using this, of course. So here now, it's just somewhat coincidental here that I had been experimenting with the Renko, or excuse me, with the Heikin-Ashi bars when this was added into the system here. So there's no need to go to a Heikin-Ashi bar here. In fact, I have 5-minute candles here with a month of data. The data here isn't as relevant as with the bars here, but that's a month is probably a good starting point. So what do we have here? So obviously, what you can see on top of the traditional 5-minute candles here, we have Heikin-Ashi candles. So it's another type of filter, right? Of course, it's the same concept here with as if you were if you had Heikin-Ashi bars on this. There's a little bit of a smoothing action here that happens, and then we have it's essentially a step-based moving average here that will flip from bull to bear when it breaks. Here it's pullback, right? The circles, right, are pullbacks, right? We're trending, we're getting a pullback. We're not breaking below the line, or we're not getting a close below, right? So we don't get that, and then so it ends up being a pullback when we get the full rip here. But note the line stays in the lighter blue until I get the big break here. So it has to break by a certain amount of percentage here that you can adjust based on your liking, and it's the same thing. These are the defaults. This is a good starting point, but you see the break here. Now this becomes kind of a bull-bear line, or perhaps that might be more risk than you want to take for a stop, but certainly can give you some indication of trend direction. Let me see if I go back a prior day. Here was the big rip at the end of the month, which so that's one of the many of you will recognize that, right? End of the month, right? Those are funds often, tightening up their books, right? So the big rip into the end of the month here is pretty common. That's a trade many are aware of, right? It's one to look for into the last few minutes at the last day of the month. Anyway, right, not to digress. So you see the same concept. We're down hard here. That's 9 a.m. We go into the open. Now, once we get on the other side of this serves as a nice trend filter to keep you in. And the Heikin-Ashi bars are just designed to do that, right? So here, that might have spooked you out of the trade if you didn't have something like this on top of it to say, oh, no, we've still got more legs here. It's not until we get up here. Well, note we get a color change here. The Heikin-Ashi flips because this is a traditional Heikin-Ashi here, but we don't get the flip of trend strength till we get here. So we get a flip, then we get a pullback, right? Then we can carry on here, the big rip. These are all pullbacks until we don't go on the other side of that line until the close of the day. So it's not a bad complement to what you're doing over here, looking for. Let's see if I can. Oh shit! Hang on a second. That's what I was trying to do. I was trying to get this pivot and this pivot to match up on the day and the time. So as we're way out of the bands here now, no triangle here, because we have not swept any liquidity to the left of us. Still a trade. It's judgment call, right? It's up to you. Now, if you're looking over here, one thing you'll note here, this is one of my favorites in addition to a CCI, right? These are tools that I use all the time. The Trader's Dynamic, look, we get above 68, we get outside of the Bollinger Bands as we're putting in that pivot. Trade. I would encourage you to not shy away from a trade like this just because we don't get a triangle there. You may or may not want it, or it may be that once we're in, it's the first little pullback to the cloud. Those are the trades I like, right? I never take the break of anything, right? I want the first pullback into it. So whether it's a break here, it's right there, right? So that's one of the things about Heikin-Ashi. It really shows you the little pause in the trend. Here's the break, right? The highest risk here is when we break the EMA cloud. Doesn't matter what the setting is, right? It could be a 21 or 13. This is a 9. When we break it, that's too much risk. So you had potential here. You have potential here. I want those first little retests. Retest. Right, those are money to me, right? That's what I'm looking for. I want to enter, and I'll wait for the new up close candle, or in this case green, right? Depending on your color choices. I wait for that next candle, right? And then you can go at the market. And this, you had 1, 2, 3. Now that was, again, that was a big rip here. Just to finish up over here, as I was showcasing it earlier. When you're right here, well, okay, let's not forget about things, as I said earlier, that we've been teaching, right? Does this surprise you? Here's the target, right? It's right to the golden zone, right? Here's the target. It's in the IB. You can't even see it. It's buried by the IB. High. Now, you might look at this and say, well, it'd be very valid, right? So I mean, it can't, right? There's going to be stops when you're taking something like this. First to the 50, right? I mean, it's not always going to be the golden zone, right? Right to the 50, you might have looked here and said, oh, okay. Well, we broke the Heikin-Ashi bars here. Again, this is a 5-minute candle. We broke. Was there money made there? Yes. Worst case, you scratch there. Well, shouldn't say that, right? Depending on your money measurement, that's enough of a move here that I'd like to think, very least, you tighten your stop up. Well, then note here we go up into the golden zone, and this would have been easy to look at this and say, oh, well, I definitely want that. In fact, I would have taken that trade because we've got a sweep of liquidity here into the golden zone. Oh, right, no go. Now, you can look at that and say, oh, okay, well, this is probably just another algo, right? It probably is. So, oh, come here. If I can get it on there. Right, so here's a 50, runs into this golden. Go back one, you can understand why it pivots here. Why you got that kick. Well, I mean, look how, you think that's coincidence? I promise you it's not. Right, so this is, so we go from golden zone to 50 to golden zone to 50 to no, but back to the IB high to the golden zone to the 50, and then finally we get the free fall. Right, this is happening all day long in every asset at every time frame. Golden, just algo battle back and forth. Right, that's saying this for 6 years. It's not why it moves, it's how it moves. Right, that's the dominant algo in the market, and you take my word for it or test it yourself. Right, there is no market, no time frame where you won't see that being the dominant algo. You just won't. Right, that's what it is. Okay, right. So you don't want to lose track of it. Now here, right, you're looking and say, well, whoa, the bars are up. Bars, the lighter blue being bullish, darker blue being bearish. Well, here, if you're selling it here, you might look at that and say, well, I didn't get confirmation from the Heikin-Ashi candles. So we're back up. Now I get 65 to the tick. When I start to come back down this way, oh, well, at least I've got the Heikin-Ashi candles now have flipped to bearish. There's a little bit of a kickback here. Oh, Jesus, that's probably one too. A little bit of a kickback. It's so pervasive. I guarantee you that's one as well. Right? Jeez. See this? It looks like we get a wick goes through by a tick, right? But it has to close above to kill the algo. Do you see how many times that happens, right? That's today. That's Thursday. How many goldens that is? Here's the target one, right, for the small one. Target for the second one. But remember, for every measured move here that meets its target, there's one that fails, right? And you see this here. You see that back and forth. So using this in conjunction with, okay, in this area here, would I be inside or outside the bands? Oh, I don't know if I'm going to be able to get right to that quickly. Probably not. Looks like it's all right around in here, right? Yeah, it is, because that's the IB high. So it's all in this right here, where you have that back and forth, right? Riding the rail of the IB, right? As I've often described it. You're just riding the rail of the IB, of the initial balance high, right? It's very hard to know which way that's going to go, which is why this is not a great place to be entering, because it's a little bit of hopium every time you're in. Like, God, I hope it goes. Oh, I hope it sells. Oh, no, I hope it goes. It's terrible place. First time, yes, or maybe from a push above for a retest, right? Bulls will want to keep it out, right, on the bears, right? If it gets out and then comes back at a retest. But when you're bumping along, right, stay away from it, right? It's just, you're going to get eaten alive, right? That's all just retail bait there. Every swing is retail bait to try and get you to take it. And ultimately, right, you get the big move. Okay, hopefully that'll give you a few things to think about here and continue. Those of you that have made the investment, you've probably done some experimentation with the iGrid Evo, as it's called. The addition here, right, this is available for anyone who's purchased, of course, right? This will also be available for any owners that have brought over that are come over to us for support and for updates that were owners prior to us taking it over. Some new things to consider. Heikin-Ashi is just a matter of choice, right? Whether you want to choose that, but it might be something for you to trial rather than trying to guess as to what's the brick size for the MNQ. A little easier in the ES, but the MNQ is so volatile, moves so fast. I think Heikinashi is a reasonable place to start. It seems to do best on a 1 minute. 2 minute, it gets a little bit the bands get too wide in my experience. 1 minute, it holds it really nicely. So those are some new things to play around with. As always, we strongly, with any of our indicators, we always want to encourage you to trial them. You get 7 days, right? So you're going to get at least 5 trading days, regardless of what day you download it, right? It's seven calendar days, 5 trading days, so you can be sure before you make an investment, right? This is not an inexpensive package, right? So make sure it's a good fit for you. Okay, with that, I'll sign off here, and we'll see you on the next one.